Welcome to Taking Stock. I'm Amanda Lang. Coming up, will there be a recession or not? Mixed signals spread confusion, and there are certainly jobs to be had. So where did the workers go? Maybe they just got old. Plus, turns out that when it comes to valuing brands, we care more about what they serve than what they do. That's all ahead. First, though, for the week that was in business, time for the briefs. With inflation still the biggest challenge in the country, the finance minister outlined the ways the federal government is helping Canadians with affordability, but offered nothing new by way of assistance. Instead, the government is highlighting existing programs, some of which are decades old, and noting they are indexed to inflation. It was a disappointment for some who had hoped to hear new targeted aid for more vulnerable Canadians. But inflation that is still getting away from us was on the mind of the U.S. Central Bank this week. The Federal Reserve raised lending rates by 0.75 percentage point, signaling that it intends to tackle inflation head on and leading to much speculation that the Bank of Canada will do the same. Both have been raising rates and promising more to come. Concerns about what that might do to growth sent stocks and digital currencies on a wild ride this week. Make no mistake, it is still a shockingly high number, but the ratio of debt to income in Canada has improved slightly. Canadians now owe $1.83 of debt for every dollar of income. That's down from a record high just a few months ago. Since our ability to service debt is the key to our financial health, it is worth noting that much of this debt is mortgages. The concern is how some of this debt becomes less manageable as rates rise. Underscored this week by a Manulife survey suggesting as many as 1 in 5 homeowners already feel they can't afford the home they're in. And the housing market continues to cool in Canada. Average selling prices now $100,000 less than 3 months ago. The Canadian Real Estate Association says housing prices are at pre-pandemic levels after surging during the lockdown, and the pace of sales dropped sharply in May, with 20% fewer homes sold than a year ago. The group noted, though, prices are still higher than year-ago levels. The long-awaited lifting of travel restrictions may help ease some of the snarls at airports, but critics say the loosening of vaccine mandates doesn't go far enough. New rules mean that as of June 20th, Canadians can travel freely by air or train in Canada. But Canadians returning from international travel still face restrictions if they're unvaccinated, and non-Canadians will still need proof of vaccination to enter. Quebec businesses continue to voice concern about a pending language law. This week, tech companies urged the Premier to delay the bill and said the requirement that immigrants learn French within 6 months is unrealistic and likely to make it harder to attract much-needed technical skills to the province. Other businesses in Quebec have worries about increased costs associated with compliance, warning that businesses new and old may leave Quebec if the bill passes as is. And those are your business briefs. How long we live with inflation is a wild card for everyone. And for business, that knowledge is also coupled with the fact that a recession could follow. It makes things complicated. Could the government be doing more to help make sure that doesn't happen? Perrin Beatty is president and CEO of the Canadian Chamber of Commerce. Perrin, great to have you with us.
Great to be with you, Amanda.
So we didn't get what we thought we were getting by way of new targeted assistance for Canadians hit by inflation. I want to start with, are you happy about that? There was some concern that it might itself be inflationary. Are you kind of happy that the existing programs are going to have to do the work?
Yes, I am. And I think the worst thing the government could have done was to try to spend its way out of inflation. What's important to understand here is that there's lots of demand in the economy. If they push more money in, it will simply drive inflation up.
When we talk about what comes down the road here, recession, of course, is the word that keeps coming up. And for businesses, Perrin, it must feel like a really weird time because they're running full tilt. They can't even find the workers they need to do the work that's available. And yet we're supposed to have them thinking about the specter of a contraction, slowdown in the economy. How does all that fit together for businesses? What's on their minds?
I think people are feeling a bit schizoid at this point. In some ways, they're feeling better because obviously we've seen growth. We're seeing people coming back to work. Unemployment is very low. I'm here now in Calgary. I've spent the week in Alberta, and there's an optimism here within the business community that I haven't seen for a long time. On the other hand, there's an apprehensiveness about inflation and where that's taking us, and whether or not we are staring down a potential recession in the future.
You know, one of the papers printed a speech by then Finance Minister Turner from 1974 talking about the need to handle inflation. And of course, if we know our history books, 1974 wasn't the worst of it. It got an awful lot worse after that. And interest rates went an awful lot higher after that. From the point of view of kind of businesses trying to think as individuals are, how long does this last? How much do we have to be prepared for? What do you think the worst case scenarios are?
The worst case scenario is obviously we get high inflation and slide into a recession, and we get whipsawed with the worst of both worlds. That's certainly a major concern, and there's growing concern about it within the business community. With the Canadian Survey on Business Conditions, what it shows is the single most important issue for businesses today is rising input costs. This has even edged out the issue of skills and getting the people that they need. And indeed, it's exacerbated the problem, because if you can't afford, workers are asking for more pay. If you can't afford the extra added payroll costs, you're going to lose those workers. And as a result, then, business in many ways feels it's caught between a rock and a hard place.
And from that position of that rock and a hard place, I guess the question is, how confident do they feel? We always want businesses to be investing in the future. We depend on it, in fact, because it keeps the whole circle turning. Do you worry that businesses will start to batten down the hatches and we get a bit of a self-fulfilling prophecy?
That is certainly a concern. Certainly what I've heard here in Alberta, and in Alberta the mood is very different from the way that it was 2.5 years ago, which was the last time I visited Calgary, where the economy had been badly hit. People are saying, if you look at the longer term, the potential is enormous. But what we need is to have an economic climate, an economic environment that is conducive to investment. And that doesn't mean the government writing checks. It means the government doing a whole range of things which may drive up its revenues without increasing its costs.
Right.
The minister yesterday talked about immigration. This is a key area to solve some of our employment needs. Regulatory reform would be another. Interprovincial barriers to trade. We can think of many more.
Perrin, it is always good to have you with us. Appreciate it.
Thanks for having me.
Perrin Beatty is President and CEO of the Canadian Chamber of Commerce. Still ahead, how the pandemic helped create a perfect storm of missing workers.